य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामुषो पुरुषो निर्मिमाणः निर्मिमाणः अदेव शुद्धं अदेव शुद्धपरब्रह्मा परब्रह्मा तदेवामृतमुच्यते अस्मिन् लोकः अस्मिन् लोकः शतः सर्वे तदूनात्यैकश्चन कश्चन एतद्वैता 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 एतद्वैता.
Not mandatory earlier, it was optional, then it was started made mandatory, and now we have a improved version of AQMM with us. So we'll also see what is the difference between the old model and the new AQMM model. But before that, I should say that India is the first country in the world to have AQMM. So what I would like to understand, have any of you submitted proposals to clients, new clients and all those? I'm sure all of us would have met new people, new business, new audits. How do you think the client evaluates us? What are the different processes by which the client will evaluate us? He will ask us, earlier days we used to say, in fact, I remember in our firm, we used to say, we have 3 PCs. We have 2 stenographers. So that used to be the criteria of telling what is the number of branches we are having, something like that. And of course, there was an empanelment was there for last 25 years or 30 years also. That also used to be referred to. But is it enough if a firm is very old or it has many number of partners or they are doing a big audit? Is that sufficient? Is that a testimony on the quality of the firm as regards the adherence to the auditing standards, the practices that they are doing? Is it meeting the auditing practices? That is what the main thing. I am aware when we speak, vast majority of us, I'm including myself also there, we will be doing audits of mainly non-corporate entities, partnership firms, small private companies, where they're actually flying under the radar. All these auditing practices and all more emanates from our conscience and more emanates from what training we have been given by our principal, our seniors, what they have told us. That is imprinted in us. And we believe what we are doing is a good quality audit. And we do that and close the audit. That's how we do. I have seen many audit firms, auditors who come and see in depth whether we have deducted tax, all those aspects. But at the same time, certain other things I felt they should have seen, should we look at it? So even when all of us are getting audited, each of us, our own audit firm has accounts, we have to get audited. So how is the other auditor who comes and does the audit, how is he approaching the subject? We ourselves know that there we are the auditee and there's an auditor in front of us. At the end of the audit, what do we feel? That the auditor has to do something more. Has he got for a direct confirmation of balance? Sir, you are an audit firm, you are an audit firm, I am an audit firm. Is he looking at that aspect and approach? What is his roles and responsibilities? These are the aspects that come to my mind. Anyway, but that's something that we need to keep in mind. So this AQMM may not apply directly for all of us when we are having a very simple, straightforward practice. The same breath, I will say, everything in this will apply to us. We can take the simple essence of it, the tattvam behind each and everything, and try to incorporate in our practice. However big the practice is, however small the practice is, we can incorporate some of these aspects, some questions are asked, we can see where are we here. See whether we can meet the benchmark to some extent or other. So I go based on that. I'm not getting into a big lecture on AQMM, auditing standards, big aspects of that. Basic things only I'm looking at. Feel free to stop me at any point of time and share your experiences, because I don't want this to be a monologue. Because if it is a monologue, we get over at 6:30. So please, any thoughts you have to share, because anything that will enrich everybody in the audience. That's the thing. So before we go to audit quality maturity model, as I said, this was introduced by ICAI. India is the first country to have AQMM. So today we send proposals, we say that we are a 30-year-old firm, we have so many partners, so many branches, we have done so many audits. That is not the criteria. So what? What's the big deal? You have so many laptops, we have done so many listed company audits. Yes, those things do matter. But does that talk about the quality of your firm? Because if there is a very professional sitting on the other side, a CFO or an independent director or a managing director, he will want to find out what is the level of maturity of your firm. We all have maturity levels. We all know where we are when we started the audits, when we were youngsters, how we started the audit. Now how we know how to attack a problem. We don't rush at it. We give it time. We tell the client, do this, advise them. We don't simply quote paragraphs, numbers. We don't quote all these things. So the maturity model, maturity comes to us also. We don't only bring problems as an auditor. If there are issues, we identify them for the client. We give them solutions also within the framework of law. That is the maturity that we have over a period of time, the experience that we get over a period of time. Very similarly, audit quality maturity model has come for the first time in the world. India, ICAI has introduced it. No other country has this. The CPA does not have it. Australian CPA does not have it. Singapore, they have accounting standards, all those things. Institute is there is a separate institute. None of the institutes, any part of the world, have introduced AQMM. India is the first country, as far as I know, to have introduced the concept of AQMM, whereby there is a self-evaluation based on certain parameters of the quality factors of the firm, which will also be relatable to the auditee, who can see that and take a call. How many of us are empaneled in CNBC? ICAI, multiple MEF. So we have that some level 1, 2, tier 1, tier 2, all those, there are different formula, weightage, points and all those things. That is also one way of rating all of us, where we are, number of partners, locations. They give some weightage and all those things. If I am a partner in this firm and another firm, my weightage will get divided 50% to that firm, this firm, like that. Very similar to that, AQMM has come in. And CAQ. Can anybody tell me what is CAQ? AQMM, you know, audit quality maturity model. CAQ stands for Center of Audit Quality. Center of Audit Quality. You have our accounting standard board, ASB. You have International Accounting Standard Board. You have IGAP. You have IND-AS. You have IFRS. You have auditing standards. ASB, Auditing Standard Board is there. Auditing and Assurance Standard Board, WASB. You have IAAS, International Auditing Standard Board. Similarly, you have a department or thing called Center of Audit Quality, which is there already abroad. I'm not sure. It's about the US or Europe. I'm not very sure. There is a CAQ. Very similar to that, ICAI also has Center of Audit Quality. Like you have Quality Review Board, you have peer review, you have FRRB, these are reviews. These are all monitoring. CAQ is not monitoring. It is sitting on the other side. It is helping you to get better quality. Center of Audit Quality it helps the chartered accountants, especially those who are in profession, to equip themselves with better tools, the audit tools, for doing the audit in a better way to adhere to the auditing standards. So I would request all of you to go through the website of just Google ICAI, give a space and say CAQ, Center of Audit Quality. You will be directed to the Center of Audit Quality. There are a lot of good tools. We have materiality tool. We have some publications and which are very good also. I'll try to see if I can take you through that after some time. So that's also part of our AQMM only. So CAQ only promulgated AQMM. The Center of Audit Quality thought it's better to have a monitoring mechanism, measurement mechanism for audit quality, and therefore they developed parameters. They sat down, picked up some members from the institute from various parts of the country, put them in a huddle, and decided what are the parameters, how can we evaluate a firm? Not only people who are practicing, even from the other side. So today, if you are going to give a proposal to a particular company, the CFO, if there's a chartered accountant and somebody from the industry is sitting like that in the last row like this, he may ask tomorrow, what is your AQMM score? Perhaps that's why Mr. Vaidhi is here, find out more about it. So people from industry will ask you, what is your AQMM score? Have you got peer review? Yes, we have a peer review. What is your AQMM score? They may ask you. So we need to be prepared for that. So that is the thing. So you have the version 2. You have practice management assurance, that is one section. You have human resource management is another section. And digital competency is another section. 3 sections are there.
Version 2, what about 1 is there? Related to this?
Correct, sir?
Here, AQMM version 2. Quoted.
Correct, sir.
Is there 1 is there?
1 is also there, sir. AQMM 1 came already 3 years back. Can you hear me? AQMM 1 came 3 years back. Initially, it was not mandatory. It was only optional. People who are going for peer review can also get the score done and get it certified by the peer reviewer. It was optional. But after some time, it became mandatory. And when it became mandatory, there were feedback given by the firms, there were feedback given by the peer reviewers that there could be certain improvements done in the AQMM methodology. Therefore, version 1 became version 2. So, version 2 is applicable going forward. From which date it is going forward, it is there on the website and all, I don't know that. It is there on the website, but you can see that. Right now, for example, our firm got peer reviewed some time back. We got it done on the AQMM 1. That is valid for 3 years, peer review. Next time when we get it done, it will be in the version 2 parameters. That's how it will be. So that is the difference between version 1 and version 2. What are the differences? We will see a little later, sir. There is also another thing called digital competency maturity model. This is a completely different thing. Part of that has come here also, the 3rd section now. It was not there in version 1. Version 1 had practice management, human resources, again practice management. The practice management divided into 2. And the digital competency maturity model was a completely different model apart from AQMM, which talked about the information technology, IT resources of a CA firm. As a CA firm, we are getting client data. They are supposed to keep client data confidential. In the olden days, when we used to do the audit, ask for the managerial remuneration or the directors or the top management, they say they will not give it to you. They are a secondary article clerk, you ask the manager to come. Sensitive data, they will not give it to us. Later on, we were also told when you do the audit, don't leave the files on the table when you go for lunch, or you keep the files with you overnight. You are given a cupboard, lock and key, you have to keep under your lock and key because confidentiality of data was there. Even you keep the salary files and all open, somebody else can come and see somebody else's salary file, right? As auditors, we have private to everything, but we should not give it away to somebody in error also. So we were taught all those things. We were taught not to talk about any company in the lift or in public spaces also. The confidentiality was built into us over a period of time. But most of the data now is in digitized form. Now, many places we have laptops, firm laptops, bring your own laptops. Nowadays, this is also a laptop. The phone is also more like a laptop today. So that's made everything. So how do you look at confidentiality of data, all those things? The digital competency model touches upon all those things, including the IT infrastructure of the firm. How you take care of a disaster recovery plan. Today you have DPDP Act, the Digital Personal Data Protection Act. How do you ensure that client data that comes to you, sometimes it has Aadhaar number, and how do you take care of it? All those things are there in the digital competency maturity model. That is optional, that is not yet mandatory. Because it is not mandatory, we are talking about AQMM as a CPE chapter today and not digital competency maturity model. Maybe after 6 months or 1 year, once getting to mandatory stage, we may have some CPE programs on that also. But some of those things are built in the section 3 here. So we have the CAQ directorate. It is a separate directorate. It is not a separate committee or something. In the institute, it has the status of a directorate, CAQ. That is the importance given to CAQ. So they have established in 2020 and they have now published the AQMM 2 version 2, which has the set of questions for AQMM 2. Some of this, all the questions we'll be going through. There is also an implementation guidance for that. And they have also issued analysis of modified opinions publication. There is nothing to do with AQMM, but CAQ has issued a PDF, a book publication. They cull out all audit reports where there are modifications of audit reports. Qualifications, emphasis of matter, disclaimer. They are given some examples so that we can, if we are going to do a qualification or write a qualification, you can refer to it for similarity and ensure that you are, because if you have a qualification to quantify it, all those things are taken care of. And it also ensures that in what scenarios you have to give the audit reporting in a modification format. It helps you. There is also a firm manual, which is a quality manual. We come to that also, the AQMM. They also have given significant audit matters, key audit matters, those type of some reference materials have been given by CAQ. That means CAQ is giving a lot of material for the practicing chartered accountant to do this job in a better way, in a more easy way. They have also given, for AQMM especially, you have the actual questions, you have the implementation guide, you have a self-evaluation also. So that's something like an Excel sheet where you can self-evaluate yourself, put your score. What happens in AQMM is, whether it's version 1 or version 2, the firm is supposed to self-evaluate, put our own marks. And the peer reviewer, when he does the peer review, he will go through your marks, he will go through your basis of giving your marks to yourself, and he'll give his marks. And his marks will ultimately goes to the peer review certificate. That marks are given based on how you demonstrate that you have satisfied those criteria. For that, obviously, documentation should be there. Because it cannot be verbal. As just like in anything else, audit documentation should be there. So when we are going to touch upon these various AQMM questions and all those things, we will concentrate on what type of documentation we should have, we should build up, not just for the peer reviewer for that. As part of our process itself, we should have the documentation. We'll also touch upon that also. So you can see the other initiatives of CAQ. They have had a bank branch audit utility, materiality, they have got a utility. The materiality is a very important thing in statutory audit. It also determines how you take sampling and all those things. So they have got a tool for that. Normally what happens, materiality in the normal audit, we don't do. What we do is, anything above 5,000 is material, we keep our own thoughts. We don't document it. It's in our mind. But this materiality concept says that you have to calculate materiality based on the balance sheet or the revenue or based on the percentage of the profit and keep that materiality. Then say, since you are doing sampling, reduce the materiality to some more conservatively, 75% or 60%, because when you do sampling and test, find some mistakes, you may, other than the sampling, mistakes could be there which are not detected also. So keep some portion for that 40%, 25% and reduce the materiality to 75%, 60%. Then you have something called trivial materiality. Anything below that trivial materiality, you don't even look at it. Anything above that, you ask the client to rectify. If it doesn't rectify it, you accumulate it. If you keep on accumulating it, if it crosses more than the 75% level, it will affect your auditability. That's how it's a very scientific way of doing it. But normally now, from when I started doing audits, even 5 rupees we used to pass it. But we have learned now that sometimes it may not be required, especially the last stage of the audit, passing entries for small amounts will only delay the audit. Overall perception does not change. So we have to look at it from the, not from the worm's view at the ground level, but from a helicopter view. So that perception aspect is all the maturity we are talking about. So those tools are not available in Center of Audit Quality. If at all you are doing a slightly larger audit and audition, you can go through that aspect and take it on. They also have brought out engagement letter utility and all those things, which will be very useful. Because when you're going for peer review and all, you need to have engagement letter, management representation letter and all those things. So these things are there, this CAQ website. The other initiatives, they got some certificate, some programs, CPE programs. They have done some training sessions. For Syria, and they've done it. They also have posts on this X. So if you are a member, you can subscribe to that and keep getting posts on it. Even FRRB has that. Actually. What are the common mistakes which are there? FRRB posts on X is very, very good. Very, very good. If you look at the past thing also, it will be very, very useful. Common mistakes that we make, they point out. Just a small snapshot is very useful. I would definitely recommend, not recommend, I will highly recommend that you, if you're all having X, subscribe to ICAI FRRB. It's very, very useful for that. To answer your question, 21 version 1 came. Then they decided that AQMM review of peer reviewers should be done from 2022. Then it became mandatory in 2023. Then they again revised it in 2024 and now 2025 version 2 has come. So the relevance of AQMM is whenever you are having a peer review mandatory for you or optionally you are going for peer review, AQMM gets part of the peer review. So I'm not touching about peer review now. Peer review is basically a sampling of many assurance engagements based on adherence to your technical standards will be evaluated by the peer reviewer and all those things. AQMM, you have to evaluate. There's a questionnaire. That self-evaluation is the Excel sheet. You have to put your own marks, give it to the peer reviewer. You explain to him what is the basis on which you give the marks. If he agrees with you, he will have a column for separately put his marks, and not much of a difference. Good. Otherwise, he may have his own reasons for increasing or reducing the marks and so on. So we'll see what are there in each and every question. We quickly run through that also in some time. The level of the firm assessed under AQMM is hosted on the ICAI website. So it is there as a public domain tomorrow. If you go and see, I do not know where exactly it is. Maybe it's part of the PRB, peer review board place, it will be there. So you have today list of peer reviewers, list of QRB, quality reviewers, we have list of FRRB, list of valuers who are there. All those things are there on the website. Like that, whoever has gone through peer review, if the AQMM score is there, they publicize in the institute website. It must be there in some corner. So tomorrow if you are going to give a proposal and somebody else gives a proposal, the client will go and see the website and see, just like searching your UDN today, he will go and see your score and then take his own decision based on that. So the importance of AQMM is definitely there. So If we have a vision that our firm is going to go bigger and bigger over a period of time, these things can be started at the nascent stages itself, so that we grow by using these things, get it into the system later on or something like that. So you have the actual AQMM, this booklet is available. You have an implementation guide that is also available on the website. So that gives for each and every question how to go about, it gives you guidance and all those things. And you have the utility, which is more like a Excel, HTML type of thing. All those files are available in the CAQ website itself. Nothing to talk about on this side. Just the focus is on enhancing audit quality. That's what they're saying. We have an implementation guide, very elaborate, more than 100 pages or so. So if you have a doubt and all, you can go through this also. And you have a utility. The utility gives you the marking and all those things. This presentation itself is not my presentation. As you see the institute logo, this AQM PPT itself is there on the website. So I didn't create my own presentation. I'm just taking the institute presentation and just being the bridge between the presentation and the audience today. So this is the AQMM 1, the blue color below, which talked about practice management and operations. The practice management is strategic and functional, the third stage, and the middle is the HR. See, any chartered accountant, what is the important things in the practice? You should have clients. You should be technically competent. You should have resources to do the audit. These are the three main things. You should have clients, you should have technical competency to do it in a proper way. You have resources to do the audit based on the size of the audit and all those things. These are the important aspects. This was given that way. What they have done now is the practice management section 1 and section 3 has been combined into section 1. HR has been slightly reduced and all those things, and digital competency has been brought in here. I am not sure whether a digital competency maturity model, which I talked about, completely moved out or something. It is there. It is optional. It is there. But some of those flavors have been brought into the section 3 also here. So now, without further ado, we will go through one by one each of the section. Each of the section has certain subsections. You have about 7 subsections or something in section 1, 5, 6 subsections in section 2, like that. We will go through that. Under each subsection, there are some questions which have to answer. How do we answer it? How do we go about it? Is what the whole discussion is about. I'll stop here. Any questions at this stage? Okay. So you can see the total marks is 600. It has been divided this way. Each area has a percentage of importance. But having said that, today you have to get minimum 30% in each section. Like your group 1, group 2 pass, you have to pass 30% in each section to get a basic AQMM score. Otherwise, you will not have a AQMM score. For example, in practice management, you get 55%. You get human resource management 35%. In the digital competency, you get 18% or you get 29%. You will not be rated. You will not in any level. So the firm is not rated, will be the answer. So you have to get minimum 30% pass mark in each of these sections. So just like your question booklet, you have to see which are the easier ones to pluck and get the points, where we'll have more difficulties. But life is not simple. If you really want to, over a period of time, the firm has to be seen. Even the most difficult part, we need to score better over a period of time. The second is, having scored well, we should not digress over a period of time. Complacency should not be there, because ultimately humans are doing the audit. Everything is evaluated that way only. So we need to keep up the tempo with some motivation and all those things also. Yeah, minimum. So, assuming that you get, supposing you get 70% in, you get, let us say in this, you get 70% in session 1, you get section 2, 60%. In section 3, you get 35%. You are level 1 firm. It is not, you take all the weightage or all those things. Each section, it will take the minimum of the sections. The minimum percentage will be taken, and where are you? It will be taken and then done based on that. So that is how I think it will be done. So the level is, if you are, as I told you, 30% is the pass mark. If you are between 30 to 50, it means you are the level 1. As you go up, you are at level 4. Some qualitative narratives are given by the institute itself to benchmark all these things and other things. So it is mandatory for any firm who is doing audit of a listed company, banks, other than cooperative banks, but multi-state cooperative banks, we have to again insurance companies. But if they are doing only bank branch audit, then it is not required. So this type of mandatory aspect has been given. That means many firms which are requiring peer review may not require AQMM based on this aspect.
Subsidiary of listed company. Subsidiary of listed entity.
Subsequently,
Subsidiary of listed entity.
subsidiary of listed company.
Listed entity. If
It is not there.
Not there.
Plain reading is not there.
Who will rate all these things? Peer reviewer will review this one, give the rating.
The peer review, AQMM will not be required.
Okay. AQMM, is it any administrative body will be there, or peer reviewer itself is scored like AQM scoring and all?
See, the AQMM is done by the firm first.
Okay.
You can still do it. Even though
Surpass.
mandatoriness, when you, supposing there is a firm which is getting peer reviewed because of other criteria, you may not be doing a listed company or bank or insurance company or anything like that. But you may have 4 partners or you will have something, and it's now required to do a peer review. Along with peer review, you can choose to do AQMM also. Whether it's mandatory or not is the question. In this again version, now for version 2 also the same thing has been given. Applicable to V2, here it is said V1, but V2 also the same aspect is there. The last bullet point says there is no change in the applicability aspect. So there are cases where you can say that I am peer reviewed, but I don't want AQMM because I am not covered in this criteria. AQMM person will be left out. It's up to the firm to say, no, peer reviewer, please do the AQMM also for me. He will evaluate it. But for him to evaluate, you have to self-evaluate and put the mark and convince him how you are given the marks. Certain things are very clear, crystal clear. Certain things are qualitatively there. Some are quantitatively there, some are qualitatively there. You have to demonstrate that with your auditing practices, documentation thereof and all those things. So again, March 25 anyway is over. Now from now onward it's only AQMM version 2. So we go to the first section, the practice management. We have 3 sections. Practice management, the second section is the human resources, third one is digital competency. It's very easy to see where the bulk of the marks are lying. Presence and implementation of formats, checklists, templates and all those things. So that is where you have to concentrate a lot. Ensure that you score well over there. But same time, some places are very easy to pick up also. Practice area of the firm, workflow, manual, service delivery, quality control, client sensitization. So these are 10 sections are there, sir, the first practice management. So, see, leave AQMM. How are we looking at our own practice? which are the places where we have to improve. அப்படின்னு பார்த்தோம்னா these are all inputs for us. How do we move things forward? Tomorrow we are going to have one more partner coming in. Even rating a partner, all these things will be helpful. Supposing I am a partner who is doing only audit, I have another person who is doing a lot of tax work. He is coming inside. And there are a lot of tax changes which are happening. As the partner, tell the client in the front itself, these are all changes are happening. We will have to sensitize the client. The moment an update comes, we will tell the client these updates are there, you have to change yourself. Or do we go at the end of the audit? When you do the audit after March, in July, we tell them audit trail was compulsory from 1st April of earlier year. 1st April to 31st March, you should have done audit trail. You have not done it, I am going to put it in the report. If you are going to tell that, you may be right. But how will the client look at it? He will ask you, if you had known this, why did you tell me? I would have done something about it. That is the 1.5 client sensitization part. So like that, every parameter can be evaluated by us. Very simple thing, very simple. So we need to see. So the first point is on, it says what is the score based on the percentage of revenue from audit and assurance standards. As an audit firm, are you doing auditing? Or are you doing manpower supply? Or are you doing GST return filing? Or are you doing IT return filing? So there are certain aspects which are called audit and assurance services. So if you are doing that, the revenue that you take from that is taken as a total amount, divided by the total revenue of the firm. The percentage is taken. Based on that, it is the maximum mark is given or a gradation of mark is given. Something like that. There's an example for that in the next slide. If you have does the firm have a vision and mission statement? This is what I said. Small practices, we don't have mission statement and all those things. We just go do the audit, come back. Simple. But they are giving mark for that. So start developing that. What's wrong? Who's stopping us to do that? So have a mission statement, vision statement. I still don't know what is different between vision and mission. Vision is where we have to go. Mission is to go there. The journey to reach the place. Or other way around, I don't know. But we should have a vision and mission statement. What touches your heart to put there? Many firms have that. Nowadays the films have a tagline, no? Like that, the firms have a tagline. Vision, mission statement. So this is the thing for the first point, revenue from audit and assurance services. So there is a firm which has all these type of revenue. The average revenue from assurance services is so much they are put, and ultimately they come with the AQMM score. So in this particular thing, revenue is not under your control. Whatever revenue comes, you do audit, we take things as it comes. So you need somebody to do some GST work, we do it. Whether it is assurance and audit or not, we do not know. So there is not much of control that we can have over here. We cannot calibrate, we cannot plan for it. But overall, the long term you can say, I want to be audit firm more than a firm which is only doing back office work. Something like that. You can think about it. Where you want the firm to be positioned. And to some extent, there is a bias here. Why you give more mark for audit and assurance? Does it mean audit and assurance is more weightage than non-audit and assurance? That is also equally important role in the society by chartered accountants. So debates can happen. But this is where it is. They are giving more mark for audit and assurance assignments as a percentage of the total revenue. That for this second part is controllable. You just have a mission statement, vision statement, you get 2 points. These are again examples only. Presence of a SQC manual, quality control manual. So I am not sure how many of you have gone through this SQC, statement of quality control for a firm. It's we talk about risk management, quality control. Supposing we are not an audit firm, we are a hospital. whether it's a very big hospital or a very small clinic with a operating ward. When you go and do an operation, the quality has to be safeguarded. Doctor has to scrub properly, he has to put the mask, has to put that quality. As a patient, at least, we'll expect the same quality in a small place or in a big place, and we believe it will be there. Hopefully, we know the doctor, mostly go like that only. So, in those aspects, the size doesn't matter, the quality matters. Similarly, in audit firms, when we say we are doing the audit as per auditing standards, there are so many standards which are there. And the audit report we say we have done as per the standards. And we say we are giving a reasonable assurance that amounts are not materially misstated, either due to fraud or error. We say that. That means many times people say auditor is not a bloodhound, he is a watchdog, blah blah blah, all those things. NFRA has come, they given more expectations, all those things are fine. We'll come to the expectation gap later. But our audit report, which we sign, we ourselves say if there is a material misstatement, normally our audit procedures should be able to find it out. That is the auditing standards which are there. It gives you certain guidelines, sampling, external confirmations, all these aspects. So if we do it as per the auditing standards, if there is a misstatement in the financial statements, either due to error or even due to fraud, a mistake without knowing we do error, knowingly somebody does fraud, that's all the difference. So error is getting concealed because they don't know, ignorance. Fraud, knowingly they conceal it. So that type of thing is there. Adherence to the auditing standards, quality, everything is there. So quality standards have to be there. We have to adhere to the auditing standards. For that, there's an overall ceiling. Normally, if you say RCMs, IFC and all those things, we say there is risk control matrix. Purchase to pay, order to cash, fixed assets, journal voucher, general ledger, payroll. These are all pillars, we say. Overall entity level control should be there. Also, we talk about IFC and all those things. Entity level controls or compensating controls. Even if some of these controls fail, ceiling will support. It will cover all these things. Even if one pillar falls down, the ceiling will hold. It will cover the whole building. Similarly, this SQC manual is supposed to be the firm's quality control manual. Each firm is supposed to have that. Whether your firm has this or not is given the rating. And the peer review or quality review board or even NFRA and all, they look at this aspects as a parameter benchmark when they come and do a review. And this SQC has now become SQM1, SQM2. There are now changes are happening. There also Institute has brought out SQM1, SQM2. NFRA is also looking at that. Who is issuing that? Who has authority issue and all those debate is going on. So here you see there are about 6 bullet points which are there on this thing. Leadership qualities. So generally any firm we expect people to lead from the front. The partners are the leaders. Even amongst the partners, the managing partner will be the leader, or no, the leader will be the managing partner, I would say. Put it the other way around. It need not be sometimes that only the senior most person should be there, or sometimes the senior most person is called the managing partner. But a firm will be known more for another partner who is the actual leader for quality, doing the audit. He knows every technical aspect. It is happening. Some firms, like I know some firms, our own firm, the partner says, no, I'm already 70 plus, I've done the audits and all. Today, latest changes, only my people know, my junior partners. So amongst them, one leader will be taken. He is put in charge to ensure quality is taken care of. The other partner, overall partner, will only take care of certain governance aspects and all those things. It is there. So leadership responsibilities is required in a firm. So sometimes we follow this without documenting it. What the institute says is document this. Sometimes it may look very silly or why are we doing that? But there are useful things over there. When they have the firm is expanding, few more people are coming. Who should do which role is very, very important also. So that it really helps. For example, when a new audit is going to be brought inside, Who should do the evaluation? Who approves that? All those aspects are taken care of. Ethical requirements. What is the ethical requirement? Every CFM follows it. How much training you give on ethical requirements? How do you take care of the ethical requirements? If you look at this CAQ itself, there are so many aspects inside this which we are actually following. For example, I will say ethical requirements, writing to the earlier auditor. All of us do that. For the new audit, we write to the earlier auditor for NOC. Sometimes we miss out, but normally we are supposed to do that. Similarly, we should also see whether there is any conflict is there. We will see that also. Whether we are doing internal audit of the holding company, the subsidiary cannot do, conflict has to be seen. All these types of, there are different aspects where threats to independence is there. And in some firms, if you are doing listed companies, after 6 years or 7 years, the audit partner has to get rotated. So if you are a slightly larger firm, those things are very, very important. If you don't do that, then you are subject to a risk when somebody comes and reviews you. It will be a problem. So those aspects and all are spelled in the SQC manual. Again, CAQ has brought out a model firm reference manual. CAQ website has a model example of a firm manual touching upon all these things. It is there. Similarly, IFAC, International Federation of Auditing, they also have got SQC manual for large firms, 2 to 5 partner firms, sole proprietors firm also they have. For example, there is one of these things, the engagement performance, which is actually doing the audit. That is engagement performance, the actual audit being done. There are some audits you should have a quality reviewer. Listed company, you should have a quality reviewer. So if I am a sole proprietary, whether a sole proprietor firm can do listed company, different. Assuming that a sole proprietor can do a listed company. Or I am a 3-partner firm, I only know audit, other 2 partners are more into taxation and GST. How, if I am doing the company audit, who will review me? Either I should have another senior person inside the firm or an external quality reviewer to review it. These type of policy matters and all are spelled out in these aspects. So this is called SQC manual. If time permits, we can run through this very quickly, little later, but not at the moment. So this is in fact, if you talk about SQC, you can talk about this for 1 hour. So my only thing is, maybe a little later I'll try to show you the SQC contents in the manual. What could be there? You will easily be able to relate to it also. There also talks about acceptance and continuance of client relationship. For a new client, you have to do a client assessment form. For an existing client, at the end of the audit, we have to do a reassessment form. I remember when I was article clerk, my manager used to go and tell my partner, sir, this audit is getting, they are putting too much of pressure, they are not taking my opinion at all. Sales cut off, they are fighting with me. Tumba talla sir, auditor want out. It's not worth it. That is client reassessment. Here, they have a form for it. You have to tick the form, put a conclusion and write it. What happens verbally, actually you do it. Documentation has to happen, that's all. We actually do many of those things. But if you are not doing it, looking at this is an eye-opener for us. There are many firms who have come and said, how do I make my practice better? Very simple answer, do all these things, you will automatically increase your practice levels. How you bring up the people from below. Ultimately, a person who is your article clerk tomorrow becomes a chartered accountant. If he sticks on with you, becomes a manager, senior manager, maybe tomorrow a partner. How to imbibe in him the values that you have got into him through these type of tools, SQC manuals and all those things. It is put in black and white, it helps them to understand. Today when I teach my daughter tables, 3 into 2, 6, 3 into 3, 9, I wondered how to teach this. How did we learn? I have really forgotten. Very similarly, these manuals help us to teach our next people who are coming along with us. how to go about what we have, sometimes unwritten code what we say, it is written in black and white and they are able to follow it in future also. So SQC manual is very, very, very important. It is only 12 marks they are giving, but it is very essential to an audit practice. Monitoring, the last part is about, it says after you do all the audits, somebody has to go through the work papers and monitor it. Supposing there are 4 of us in one firm, all of you do audits. One person has taken, except for his own audits, he will go through all the other audits, ensure it is done on an annual basis. September audits are all over. In November, December, sit down and go through and see whether we have got all the documentation correctly, whether we have done, for example, do you have audit planning document, you have a materiality, is it documented? No, we talked about it. No, is it there? If it is not there, it is not done. That's how it is. You can talk about those documentation done, engagement, performance and all later, but monitoring is that. So all these policies are given in the SQC manual. Time. How many of us have time sheets in our firms? We need to have, for the article clerks, we are supposed to give them the training hours and all those things. So how are we having the time sheets? What it says now is, the top 20 assignments we should have time sheets. In some other place, it talks about, do you have a software for time booking and all? I think AQMM 1 it had that. I don't know about 2. I'm just going through. It had those type of questions also. Earlier we used to have manual time sheet, weekly time sheet. If you don't fill it up for 1 month, 5 rupees fine. One article clerk gave 60 rupees and said, for advance for 1 year, sir, I'll give the fine. Don't ask me for time sheet. So like that. But there were AQMM for manual time sheet versus system time sheet. We have it in the system or something like that, where it is automatically captured like that. Today, many software companies have time sheets. On the time sheet, they bill billable hours and all those things. We are also supposed to have billable hours, but the same software we can also use. Ultimately, we are also a service organization. So these type of things are there. But it's very important that if you are going to have AQMM in your organization, take the top 20 clients. In fact, I sent a mail to all my partners. They take the 20 large clients. If you take 20 large clients, maybe they will take care of 60% of your practice. See the time management. Do you have a time budget? First of all, if you have a time budget, what is the basis? Last year. Should last year be the basis every time? Honestly, no. I know an audit we are doing for 50 years. Every year doing it for 4 weeks. Given the chance, I'll finish it in 2 weeks. Because we know the audit, we know the comfort, we know which are the places where we have comfort, where we have discomfort. Don't keep on doing audit in the comfortable areas and reduce time in the discomfort areas. Or take it to the last moment and discuss only the thing and somehow close it out. Start planning on the discomfort areas first. Comfortable areas, ask your article clerk to finish it off. And then 2 weeks you can crash the audit. If you do it in 2 weeks, your expenses are lesser, profitability is better. More is you can focus better on the essential areas. That's what our mother used to say. The 7 maid, she will go and see whether she lift that chair and see whether the dust is there or not. So she knows exactly where are the pain points. Similarly, our audit also, we know if you are doing the audit cake, we say cake, cumulative audit knowledge and experience. We have to leverage cake. If you have been doing the audit for more than 3 years, 4 years, we should know how to reduce the time. On the contrary, what happens? Everybody is used to it. Okay, 1st July, 31st July, board meeting is on 3rd August. If they make the board meeting on 22nd July, then the audit will get over by 3 weeks. Why should the board meeting determine what you have to do? If it is the 3rd August, you finish by 15th July, come out and do other audits or go on a holiday. So that systems, if you want to get it, audit planning, everything, you have to adhere to the standards. I will come to that a little bit later because when I am talking to our audit team members today, we are trying to inculcate. When I started my training in a firm, My third year, second year taught me that they have already come to a system where it is a well-oiled machinery. So when I go, the second year, third year will tell me how to go about and all those things. That is not there in some organizations today. How to build that? So once you build that manual way of doing things, the discipline, doing it at the right time and all those things, then if you have an audit workflow, whatever workflow and all those things, then you can use that, leverage it better. But having a software will not help you unless you are disciplined in doing things at the right time and all those things. That is what is first thing is very, very. So for this, simply put, you have to take a time budget. You have to put a time budget. See, don't take last year's alone as a thing. See how you can crash the time, where you can do, plan better, and reduce the time, put a time budget. Actuals may be there. I have told our team members, even if the actuals are twice the time budget, don't worry. Let us start this process. Sometimes there is a tendency to put this time against some other assignment also. There also, I am doing 2 audits, this is already overshot, this is having more buffer. So time booking is also very important, it has to be seen properly. And if we do that over a period of time, it is not just for AQMM, it will really help us in actual effectiveness of audit qualitatively and also commercially. With the same set of people, God willing, if we get 5 audits, you will be able to do the same 5 audits with this set of 3 people team. Now today you are doing 1 month, 1 audit. April 1 audit, May 1 audit, June 1 audit. If you are able to crash it, you can do 5 audits in the 3 months. Then you are, to that extent the costs are same, but your fees will increase, profitability will increase. So time budget is definitely important, but we should not rush things. We should give that 1 or 2 years to slowly tighten it over a period of time. So there is a time budget, as I say. So other things they are asking is, have the firm been quality reviewed by QRB or CNDG? If you have got any negative marks, then we will have to say. Again, what is negative? Because the QRB report, like our report, it is a clean report, qualified report. Apart from that, they are performance, they give you some, like other matters we have, they have certain other matters for improvement. Improvement points are there. So the question is, many times the QRB, you will get a clean report, but there will be 4 or 5 points for improvement. Whether that tantamounts to advisory or not is something which is there. It is a question of interpretation also. We will have to see that, and that's where the guidance note comes in. Yes, that is an advisory. Then you may not get the negative marks, or if you don't have any QRB done in your firm and all, then it will be 0 point. There will be no negative points. That is the aspect. Similarly, FRRB, tax QRB also is done nowadays. For tax audits, Form 3 CD audits also, we have separate tax QRB ICAI, which reviews only large companies' tax audits, whether they have been done in the proper manner. For that also, if you have TAQRB ICAI, they are given some common mistakes which people make and all those things, which also will be very good technical input for us. They ask for any discipline thing is there. If it is there, negative point. If nothing is there, 0 points. It's not a positive thing. No negative means good. It's NFRA evaluated. So all this monitoring has it happened. It's very easy. If it is there, it is there. It's not factual. There's nothing much you can do about it. So these are all there in this 1.4. These are all 1.4. If you go back, you have finished practice areas, workflow, service delivery, and 1.4 quality control for engagements. 1.1 was revenue and all those things. 1.2 is the SQC manual, which is 12 points. That manual itself is 12 points. Service delivery, effort monitoring, the timesheet and all those things, 20 points. 1.4, all this quality review, negative points at 0 points. Then you come to 1.5, client sensitization. So as I told you, there are many places where we can sensitize our client. Many things, GST, any updates that are coming today in GST, income tax, now last date of filing is moved, that is fine. Now new MSME criteria has come from 1st April. So we have sent a mail to all the clients. Now more people will come under MSME criteria. So you have to take care of it. And last year that form came for every 6 months you have to file. If there is even one party there is a delay, you have to file the 6 months form. All these things are there for MSME. There is a form to be filed every 6 months, even if there is a delay for one MSME party. And the delay is not just 45 days as given in the newspaper. The delay is, the due date is, if it is agreed between two people, I am an MSME, he is a large player, I am a vendor, we agree for a credit period of 50 days, it is 45 days, as per cap is there at 45 days. If you agree for 25 days, it is 25 days. If there is no agreement, it is 15 days. That's what MSME Act is. So,
there is agreement restricted to maximum 45 days.
maximum 45 days. So what generally is the
In
press?
45 days we can fix that.
Correct.
Days.
For this 43BH, generally in the newspapers they say MSME not paid for 45 days. That's what they put it. It's not 45 days. If there's an agreement for 20 days, it's 20 days.
Yeah, 20
Then
days.
21st day you pay also. It's well within 45 days, but it is overdue.
Suppose if at all it is paid already within before 31st March, is it required to qualify? Suppose the time limit is 25 days, 20 days, say, as per the agreement. It might have been paid during the period 30 days.
But before 31st March is made
31st
good,
March,
but there has been delay during the year.
31st March only we
It
have
is supposed to be filed. That form is supposed to be filed.
Yes.
So now we are getting to a technical debate of MSME, but it is supposed to be filed. What I am saying is, the fact that these nitty-gritty things, that is the core issue. This has to be brought out properly and told to the client. So there is no misunderstanding. Communication is proper, so that that's how you sensitize clients.
So what about trading entity? It won't be applicable. No?
Trading entity is not applicable.
Not applicable. Only for manufacturing entity.
That is also there.
Yes.
So that caveat also you have to tell them.
Yeah, yeah.
So all these things, say, whatever is there, you have to present it properly, highlight these important things, because generally in press and other things, they generalize. That's where chartered accountants should come into the picture and give precise aspects.
We won't rely on the press statement, actually.
Correct, correct.
So last 1-2 months back, one press statement came. Those who are having turnover up to 2 crores, no need to pay tax, all these things.
Correct.
So based on that, many of our clients calling us. So since we have only 2 crores under, no need to pay tax. We got it from the press statement.
Correct.
Those issues are not there. That and all come.
We have to be careful because general word is press and all they generalize
Yeah.
the common understanding, but we have to be more specific. So what here talks about is TCWG. TCWG is a word which we keep using many times. Those charged with governance. So who is those charged with governance? What is management? Is TCWG and management same? You are doing an audit of a company or proprietorship, private company, whatever it is. The grandfather is there, he started this business. Then next generation, third generation has come now. They are all directors. The grandfather is the chairman. The father is the CEO or managing director. The son has just come to the business, is a director operations or director marketing. He is slowly finding his way around. Now they are only taking care of the business also. They are also the owners also. Then TCWG, those charged with governance and the management are same. In some places, they may be different. You take normal listed companies and all, you have shareholders, they are outside. Maybe some finance institutions have so much stake, public has so much stake, some specific people will have more stake. It will be there. Even in many business groups, there are unlisted companies, listed companies, but even in the listed companies, some companies have more stake in that also. That is fine. But you have a independent director, and this listed company's holding company will be there. That company's director will sit here also. He is not an independent director, but he is not doing the day-to-day work. He is a non-executive, non-independent director. Then you have whole-time directors. Whole-time director can be operations or finance, or we have both in the company. So in those type of cases, the board of directors is PCWG. They are charged with governance. The management is the whole-time directors, the director operations, whole-time WTD operations, finance director who is a whole-time director. Under them they have heads of department, CFO, human resource, blah blah blah. This particular division, division, they are all management. So management is different from the board of directors, which are PCWG. In our audit report also, if you see SA 700, responsibilities of management. But inside, we have to talk about board of directors, PCWG. So there is a lot of debate on who is responsible for what. In the Companies Act, board of directors are responsible to govern the company. IFC and all, they are responsible. Management is only the executory part of it. They are responsible to maintain it, but to ensure that they are doing it, the police work is done by the PCWG, board of directors. Two of the directors, the whole-time director operations and whole-time director finance, they are the whole board of directors, but they are the heads of the management. So they are there, one leg here, one leg there. So even in our planning document, if you look at your ASPM, planning auditing standard, there is an annexure where it says, and the communication of those charged with governance is another auditing standard which is there. There in both these places it says, at the planning stage, one should identify PCWG. One should identify management. It is there. We may subconsciously do it, but when the planning document is supposed to document it. These are the things I am saying. Even for small audits, you can start doing it. So if you read your auditing standards, it's not necessary the auditing standards are only for Big 4, Big 6 or listed company, large business houses. Even a private company, sometimes in a private company, the owner is separate. The manager is a CEO who may not have stake. He is being paid a salary. Especially in the Middle East, that is there. For that only they have an audit itself. The CEO is paid a percentage of the profit also. There is no requirement for audit in the Middle East. The Sheikh will give that he will allow him to go home only once a year after the audit is done. So ensure everything is fine. The auditor will only give him the exit visa, so to say. Similarly, we also have to differentiate between the owner, TCWG, who has the governance. In listed companies, owners are shareholders, board of directors is TCWG, management is different. So we have to do all those things. So that means we have to read the auditing standards. And certain things we have to, we may say, not a big thing. Depends. Tomorrow they are slowly becoming big, or tomorrow you join a larger firm, these things will be very essential for our one's survival itself. Very importantly. So these aspects. So what they are saying is the auditing standard on TCWG, it says that at the time of starting the audit, you are supposed to communicate to TCWG that you are doing an audit. It is only giving reasonable assurance. You are not giving 100% audit, everything, small things you are not checking. I am doing sample checking. Sampling is allowed. I do based on certain materiality levels. It gives reasonable assurance and not absolute assurance. All these things you have to tell the TCWG. You have to tell them how you are going to plan the audit. What is the type of estimate given by the judgment by the management, you will evaluate them. You have to tell them how you are doing, certain things are there. If you look at the auditing standard and TCWG communication, it says these are the touchstones you have to do when you start the audit. And at the end of the audit, these are the matters that you have to cover with them. It is there. So typically larger firms, at the start of the audit, normally in February, March, they will ask for a meeting, or when they do the December quarter, February, March, the quarterly review is done or something listed companies. At that time itself, the board is assembling, audit committee is assembling. They also give the plan for year end. So that actually takes the character of TCWG letter. significant risks, key changes, all these things are touched upon at the planning stage of the audit. Now there is a accounting change, anything that is happening. Now 2 years back, material accounting policies, significant accounting policies became material accounting policies in India. So you have to tell them what it is. 3 years, 4 years back, no clerk came, the code of ethics, for applicable only for certain listed companies and all. So there you have to tell what is no clerk, explain to them. And also tell them, because of that I'm not doing knee-jerk reaction of immediately started jumping laws and regulations, we'll take a measured view of the entire thing. We have to reassure them of our audit approach and all those things also. It's a question of communication, so that they view the auditors the right perspective. So all those things are TCW. See, don't we do that, sir? Any of our clients, we go and talk to them, above we go talk to our coffee, tell them these are the changes that are there, this is happening, this is how this is there. So these aspects are called TCWG. This is supposed to be given in a letter form. One more thing, NFRA has many times what happens is, when we do audit, we meet the audit committee. The audit committee chairman will brief the board will take decisions, then the accounts are signed at the board level. But audit committee approves the audit accounts, everything, then the board will ultimately adopt it. Now, we don't meet the board many times, but NFRA has said TCWG is not audit committee. Audit committee is only a subcommittee. Therefore, sometimes we make presentation to the audit committee that is taken as communication to TCWG. NFRA said no, you have to write to board. So now what the firms are doing is, apart from the presentation, the same presentation content is put in a letter form and also issued to the board on the same day. So that is also happening. In larger firms, they are doing that also. Just I will mention that. So these aspects have to be taken care of here. If you are putting a key audit matter, if a listed company is a key audit matter, you have to explain to the board why you are taking it as a key audit matter. They also sometimes ask you why you are a key audit matter every time. For example, in a company, you may say revenue is a key audit matter because so much of point of recognition is very important. It's very complex transactions. Then it's a software company. They are building software for somebody else. So what is the point of stage that is there? The stage of completion is important. Every year that will be there. Then it is an important matter, key audit matter. In some other company, the key audit matter could be evaluation of the liabilities, contingent liabilities, the legal cases or income tax and GST cases. There, if it is remote, probable, possible. If it is remote, don't even disclose. If it is in the middle, disclosure. If it is more likely that you may have to pay, provide for it. That assessment of the management where they are, we have to assess them. That is being assessed based on the technical input from the legal advisors, based on latest case laws or some case happening. All those things are done in key audit matters. Sometimes they ask, once first year I've done everything, second year, what is it? It's only incremental. Second year there is no change. Why should it be a key audit matter? You can remove the key audit matter. They ask like that. So sometimes discussions happen with the TCWG. So basically this thing is to tell, you sensitize the clients about developments are happening in the industry which they have to adhere to, otherwise you may tomorrow put the audit report. Part of the audit, you have to communicate certain basic requirements which are there in the auditing standards on TCWG. So that is what it talks about. So if I am the peer reviewer, you say you have taken 8 points, I'll ask you where are we communicating. So you must have letters. So we have started that format of letters and all those things. Many things are templated, but it is for every client. There are some changes which are being made for the particular, depending on the type of issue which is there and all those things we give it. And year to year it will change also. That is also there. So institute has this. If you have one particular client which exceeds 40% of the revenue, you are supposed to inform. You also have KYC, know your client. You have to keep, and this is also there at the ethics of the institute. Now you may say that I don't have any client more than 40%. What I do is, I ask my accountant to prepare it, put the percentage client wise, I put a conclusion, no client is more than 40%, sign it, date it and keep it in my file. I am demonstrating tomorrow after 2 years to my peer reviewer that I have seen it at the timely basis. at the end of May, every audit I've seen it, or in April, May I do it for last year, and ensure that this is taken care of. This is a requirement that we have to give to the institute to conclude that you are not required to give this to the institute because you don't have any case more than 40%. You are supposed to compute that, document it, sign it, and keep it in your file like a work paper. So we started doing this. 2 years back, we didn't do it. I had some mail from myself to my senior partner, it is not there, I have done it at all. The peer reviewer took that and said, okay sir, I believe you, he gave it. But then we woke up, now we have a formal document, we put it, conclude it, date it and keep it in the file. So these are the things that you can see. Even if you don't have, you don't go for negative marks. Suppose in worst case you have a 40% client, then you will have a problem also. You are not adhering to it also. Not only you don't have a system of detecting it, you have a major client. Because you have a major client, more than 40%, you are dependent on him for survival, your independence may be questioned. Then, in that audit, you are supposed to do a quality review from somebody. So, there are certain checks and balances given by the institute. Minimum fees. UDNs generated within the specified time. You have 60 days to do it. Normally, certain firms are very clear. Today board meeting is over, you generate the UDN today. Normally what happens? Board meeting is over, directors have to sign. Some places, the directors come from different places, everything is ready. Moment meeting is over, they get the signatures, then only they allow them to go with the boarding pass to wherever they have to go back home. Then the auditor gets it that day evening and tomorrow morning they will get it and they will sign it off. NFRA says for those things, ensure that adoption minutes is taken. The board has adopted, take a minutes extract. Who is authorized to sign also take an extract. All those things, NFRA has recommended that also. With all those things, we have to take the UDN also. Some places what happens, though the board meeting is done, numbers are fixed, the actual financials are not ready. It takes another 5 days to finish, to actually put it in the proper format, cash flow is not ready, something like that. Then you actually sign it after 10 days. You take the UDN only on that 10th day because you have UDN for 60 days. So you can take the UDN on 17th of June. Today, the date of taking the UDN is 17th June, date of UDN is 10th June. So there is 7 days gap. The more gap you have, more marks you will not get. So you have to tighten your system. You have to tell the client also. If you want to have the board meeting, account should be ready previous day. And one more thing, when you take the UDN today, 17th June, dated 10th June. The board meeting was on 10th June, accounts adopted that day, signed off that day, so to say. Maybe physically it has got signed today, we don't know. I'm not getting into that. If you have taken the UDN today, for heaven's sake, write the UDN by hand. Don't type it in Word, print it and sign it. Because this signing is supposed to have done on 10th June itself. Only UDN was not written for 7 days. If you type the UDN and take a printout, very clearly established that this printout was taken on 17th June when the UDN was raised. That means this paper was pulled out from the printer on 17th June, but dated 10th June. That means you are backdating the accounts. So if you are taking UDN later, write the UDN on the audit report date, and normally don't backdate. Sign the audit report that day itself. That is, so these are the things they ask us to be more tightening the whole thing, is what they are saying. So again, more quality, more discipline is what they are talking about. Do you have enough assurance partners? Again, qualitative. Whistleblower policy. So we had a place where one particular listed company, I was the engagement partner, I had a senior manager. One particular audit point, he had an opinion, I had a different opinion. Unfortunately, my opinion, client opinion were same. He felt we should qualify or something like that. I told him no because of this reason. He is still not satisfied. I said no, nothing, finished off. Quality review partner also agreed with me. He is still not satisfied. He went to my senior most partner and said, sir, this is something I'm telling, sir. I'm not trying to report to sir, but the quality of the firm, for the firm's interest, I thought I should, having been in this firm for 10 years, I should not keep quiet. We only really applauded him. That is the whistleblower policy. So, actually we didn't have a whistleblower policy. So, it is better to have a whistleblower policy. You encourage people to speak out. You have to encourage people to speak out. Even some places they say, when they come from another firm, sir, whatever you say, I said, no, you are more technical. You should tell me. If I make a mistake, you are my sounding board internally. The client, before client finds out that I made a mistake, you tell me I made a mistake, internally it's finished. At least when I go out, we go out the proper thing. So that how that system has evolved in the firm is also very important. Along with this whistleblower, today POSH is also required for all CA firms above a certain level or whatever it is. That also has to be taken care of. Because whistleblower, that and all, everything has the same ecosystem. Sometimes for whistleblower, you may have a particular email ID. That email ID is accessed only by one particular senior most partner. That may not be known to them, but internally you may have a policy. You may have a system of even a box kept somewhere which is not in the CCTV. So many firms have CCTV. You kept in a place where there is no CCTV, so anonymous thing can be given. Even to that extent, it is there in large firms. So, whistleblower policy for the firm itself is sometimes new to hear. We may be a little surprised, but it may be the fact that we have it. We say, I have whistleblower policy, nobody has told nothing. It helps us to know. Number of branches, all those things also count a lot. If the firm has been peer reviewed earlier, that gives you some more points. This is the main place. Formats, checklist, templates. So you have the mic, hand mic. With your permission, I'll sit for some time. For issue, there is some time out of this. So, coming to this formats, checklists, and templates, there are many formats that we can use. I talked about the SQC manual, quality control manual, that is fairly templated. Yeah. CAQ has that, you can just pick it up, use it. But if you want to really use it in your heart, you have to take care of it. But it is there, the format is there. Now, that is a quality control manual. You also have something called an audit manual. Audit manual should reflect, just like you have accounting standards, and the significant accounting policies reflect the accounting standards followed by the particular company. Similarly, the firm should have an audit manual, which is a significant accounting policy equivalent, that reflects the auditing standards. So basically, some people say we are replicating it. No, but if you are putting it in some form, then checklist or something, it helps us to evaluate it. So I will give some examples here of some checklists, forms, and all those things. The first aspect is, I go back to SQC. In the SQC, you have ethics and independence policy. SQC, where you are supposed to declare, everybody in the firm has to declare. We have a policy that in April, the first month of the financial year, everybody will declare the independence, confidentiality and all at the firm level. There is an ethics and independence policy. They will say, I have read this ethics and independence policy. I promise to take care of data confidentially. I promise to have ethics. Gifts, hospitality, you should not take. All these things are there. And other to it, it is there. And it will also say that I don't have shares in any of these companies. We have a list of publicly held audit clients. Publicly held audit clients is listed company like that. We put our list of clients. No, I don't have anything. I don't have sometimes what happens, our clients are there, the client's relatives, son or daughter will come to for audit. What we used to do, we will not send them to the audit, right? That is what is independence. Minali we used to do that. But today, that person has to declare, my father is a finance manager there. So we will not send him to that audit. Very simple. So like that, we have to have forms. So lot of forms are templated. In the SQC manual itself, there are a lot of forms which are templated there, which can be utilized. When you come to audit manual, I will give some examples. For an engagement itself, you should have an independence, overall independence for the whole firm as such. This particular team is doing the audit of this particular bank. I don't have anything to do with this bank. You have to give an engagement level independence form. So you have to put a form. Similarly, you have going concern. It's an auditing standard there. So how do you ensure going concern? The company is doing very well, sir. Profit, everything is there. What is the question of going concern? Fine, but did you evaluate it? Did you document it? So have you applied our mind and evaluated it? And then have you documented it? For both, if you have a checklist and you fill up the checklist and conclude and sign it off, you applied your mind, you also documented the same. So what we have is we have a going concern checklist. What does going concern standard say? Do you have any red flags? Financial red flags are there, operating red flags are there, human resource, company is not doing well, losses are there, or negative net worth capital, or the whole thing is negative net worth is there, or liabilities are more than the assets, or huge impairment is there, or financial indicators, or some company where technology is not slowly is getting into a situation where it's not going to be used tomorrow. Suppose you have a battery company, lead acid batteries is to be done. That company will not survive today. Today you have gone to different technology itself. Or you have a company, Nokia itself you saw, phone. The company did not survive going concern issue because people started using touch phones. They thought they will not use it. So technology or some indicators should be there where key people move out, they are not replaced. Why are they not replaced? Something wrong. Or sudden non-compliance of some major issue. This is what is given in the going concern standard. So all these parameters you pick it up, put it in a checklist. In IRCA, yes, no, not there. Tick it off. No red flags. No problem, no issue. There are red flags. There is a red flag coming. Now the next question is it a material uncertainty or not? For that you have to use a judgment and conclude. If it is a material uncertainty, has the client disclosed it? If yes, you give it in material uncertainty paragraph. If he has not disclosed it, you have to give a qualification or whatever it is as per your auditing reporting standard. So you have a checklist for this flowchart type of thing. You fill it up, conclude it. So that is the demonstration that you have applied your mind on going concern, documented, concluded, and after somebody has done the senior person, the partner will review it and sign it off there also. So that is a very simple example I am giving you for this checklist.
Nowadays, non-corporate entities are institute make it mandatory for audit. For that, we have to write all these things, different accounting policies, followed, audit report, everything, notes of accounts, all these things.
Notes and accounting policies are there?
Non-corporate entities. Now our institute make it mandatory.
Guidance note is there, sir.
Yeah, notes on account, everything we have to provide it.
Correct. Guidance note says you have to provide.
Okay.
So if the client does not provide that, as an auditor you have to take cognizance in your audit report because guidance note have authoritative weightage that also is given by the guidance note.
Like company standards, we have to prepare all these things. Significant accounting policies.
If they are not giving it properly, you have to see. Small, I think, again, materiality is there. Suppose I have a particular trust where they say I will not give previous year numbers. I will have to comment upon it. Basic thing they are not doing it. They say, sir, I don't give one particular thing. That I can take a materiality call. But they don't do fundamental things, then it's an issue. That is there. So when we come to this type of checklists and templates and all, for example, you in the company you have 143.1. 143.3 is there for all the different aspects you report. 143.1 talks about 6 items. Whether there are personal expenses, whether investments have been sold at a loss. Like this, there are 6 items which the auditor is supposed to inquire, and if there are any issues there, he has to report upon it. Correct? That is the section 143, subsection 1. Now, most of our audit report do not contain any comments on that, because we find that all the 6 items there are no issue on that. How do you know? How do you know that you evaluated it during the audit? There are no personal expenses. The fact that you are not reported means you are taking a call that there are no personal expenses. How do you know? So we need to have a checklist. Is it there? Is it there? Yes or no? Yes, we have evaluated it. So the checklist, some people say checklists are putting a scope for like a horse, you only follow it and go. You are not giving versatility or flexibility. No. There are, both sides of the coin are there. But checklists ensure that at least 70-80% quality is there. After that, you take out and go wherever you want. But at least go up to the destination to some extent. So checklists are very important. So for every auditing standard, there could be checklist devised by you. There are many people there are a lot of checklists for every auditing standard. Today in the internet, you get ChatGPT, easily you can get it. And the Bombay Chartered Accountant Society, they have brought out checklists. Our institute has brought out work papers for each and every area, what needs to be brought out and all. There are a lot of books available. Institute material itself is available. So we have to incorporate that as part of our work papers. Somebody says, I've done it, sir. That is not enough. He has to do this and say, I've done it, sir. This is a tool for him. It is a tool. It is not documentation which is just a non-value added job to be done after the audit. No. This is supposed to be done. Use your judgment, exercise your mind and conclude, and then the same thing is reviewed by the senior to ensure that he is done it the proper way, and then it closes it. That is how the audit is done. So checklists and templates have to be done. Now there is an annexure for that, and if you go to the guidance note, there are a lot of examples given to this. We can spend another 1 hour on these checklists and all those things, but I am not doing that. I have just given 1 or 2 small examples. Contingent liability checklist, cash count checklist, inventory count checklist. In this previous time they had risk of evaluation. If the time permits, the planning stage what we should do, I will also try to take it a little later. Any questions here after this? The checklist format? So these are all the different checklists which are there. So I told you about the client acceptance. Every client acceptance, new client. When you have a new client, you have to be careful. You want to see any media report is there, who are the owners, any adverse things is there. All those you ensure before you start engaging, because 80% of your trouble will come if you have the wrong client. If it's not the right client, 80% of your trouble. The converse is true. If you choose your clients wisely, our practice will be better off. This is fundamental. Many people have learned the hard way also. So that client evaluation is very important. If you evaluate only based on fees, long run, you may have maturity models coming in also. That is one aspect. Client reassessment, as I told you, at the end of every moment the board meeting is over, accounts are signed, I tell my audit managers, do a client reassessment. Was there you had to pass this entry, was there resistance to pass the entry? Did they have some numbers? Sir, I already told the management this is a profit, you cannot do that. Sales cut off, sir, how do I reverse this turnover? Very clear, it is not a sale as per the expert opinion dollars. They refuse to do it. It may not have much impact because it's second class inventory, only the margin is moved, but there may be resistance. Or sometimes you spend so much time, despite our time budget, doing the audit effectively, so much of time spent getting the information, it's not worth it doing that work. Commercially, it's not worth it. So all these things are there in client reassessment form. New client assessment form, client reassessment form. This has to be done. Now the SQC manual will say that for every new client, the partner or somebody should do it, and there is one senior partner who should approve the new client. Supposing we have a firm where we have Chennai, Hyderabad, Coimbatore, Tirupur, we have everywhere we have. Somewhere in Tirupur, one partner takes one client and then takes it. Something happens tomorrow, what will happen? So all these checks and balances, control should be there. Everything is one firm ultimately. So there should be one partner who is ensuring that these things are all taken care of and all those things. So I may be a local person. In my eagerness to have more revenue, I will just take clients right, left and center. Somebody is on top, if he sees it, he will see that, oh, should we have this client? Some of us have a thing that I should not have a client in this particular industry. I view it as risky. It could be there. So those aspects you have to take care. So confidentiality, I told you, independent confirmation, confidentiality at the firm level and at the engagement level. Planning, budgeting, understanding client business. Simple thing, what is the client doing, what are the key business, what are the risks, business risks which are there for the client. All those things can be documented, which will help for the future teams also. What are significant laws and regulations which affect the thing? I'm not talking about note law, I'm talking about laws and regulations that affect the audit. What the auditing, there's a separate auditing standard for that, right? Laws and regulations affecting the part of a statutory audit. What the auditing standard says is, you look at the compliance for accounting standard, whether it is IGAP or Ind AS or the IFRS, US GAAP, that is one thing. You also look at the regulatory framework compliance. For example, you talk about in your audit report for companies, it is as per Companies Act. For banks, you say that it is as per RBI guidelines are being taken care of. Insurance company, IRDA guidelines are taken care of. Now, laws and regulations have, I will put it into three major categories. Some laws and regulations, if you do not comply with, will directly affect your financial statements and therefore directly affect your audit report. Any examples for that? Anybody can give any examples? We have Companies Act, it's a law and regulation. Schedule 3 is there, it is also part of law and regulation. If you do not follow Schedule 3, will we give a clean report? We will not give a clean report. So, non-adherence to Schedule 3 might directly affect your true and fair view. Non-adherence to Schedule 2 will directly affect your true and fair view. Non-adherence to Payment of Gratuity Act may affect your true and fair view if it is material. Payment of Gratuity Act, gratuity has to be provided for. If provision is not made, it will result in understatement of provisions. If it is material, it may affect your true and fair view. The company did not maintain proper laws and regulations for lift, or they have an escalator. For that lift and escalator maintenance act is there. They didn't maintain properly. Will it affect you, true and fair view? It will not affect the true and fair view. So it doesn't directly affect our true and fair view. Boiler Act is there. Dangerous Machinery Act is there. It will not affect directly. But if they do not comply with that properly, and it results in any material penalty or fine, sometime back in Ennore they had this oil spill and all, some companies there were fined some amount. Then if that amount is material, it may indirectly affect your true and fair view and therefore your reporting. Certain things like pollution control may affect your going concern itself. Accounts company going concern, fundamental assumption itself it may affect. So you have to understand when you go for the audit with what are directly affecting. For what directly affects you, you have to gather audit evidence and keep it with you. No two ways about it. For things which are indirectly affecting, audit evidence is not required. You have to inquire with the CFO, inquire with the company secretary, read the minutes of the company, any legal advisors, anything which is a problem there, then you have to see the effect. Will it result in a fine, or did you get a fine? Did you get a show cause notice? Evaluate that. Other one, pollution type of thing, going concern, is there anything you have to evaluate. So like this, it is there for laws and regulations. So if you have to adhere to this standard, you have to tell your team, you also have to ask that manager there, for the software company, he will say, Cyber Security Act is my most important thing. I am now dealing with client data, DPDP Act is most important thing for me, he will say. Whereas for a particular chemical processing company, he will say, my most important law is Explosives Act. It may not do with the law, your accounts. Accounts you have directly affecting Schedule 2, Schedule 3, income tax, payment of gratuity act, indirect tax, GST you don't do properly, it will affect your accounts. That is how we know. Operationally, what is most significantly affecting the business risk, which can indirectly affect, we have to find out. But those things you have to document and keep. Again, there are some audit softwares which give you some templates. It asks you some questions. If you don't have to have software, ChatGPT itself gives you today. So you get all those things and start documenting like this, all these things. It will be helpful for you. Then for each of these things, if you do it, there are firms which are coming to other chartered accountant. I know a chartered accountant who is helping other CA firms to scale up. He is doing this as a not an assurance engagement, but he is doing it as a consultancy engagement. How to scale up other places. There is another chartered accountant who is an expert quality reviewer. Because within the firm you don't have. He said, I am a quality reviewer. You want my services, I'll come and help you. You want my services, I'll come and help you. I'll put ND, confidentiality clause. Yours I will not discuss with you, yours I will not discuss with them. So it gives new avenues of quality assurance for an experienced chartered accountant who's 60 years and retired from the firm. He has this, and he has satisfaction of helping others come up also. At the same time, charging some amount and taking care of it. Oh. So many more checklists. So I'm not getting into all these things one by one because it means tantamount teaching you the audit itself. That's not my intention. I'll get up now. Again, certificates, very important. ICAI guidance note. I'll just take a minute. In one particular case, we had a certificate given for some benefit, export benefit, something like that. We found that 2 of the invoices have been claimed already. They were again claimed. Second time they have been claimed. They have found out also in the department. The client friend told them it is by mistake only. He convinced that person, fine. But that person, mistake, said, again remove it and all, he said. But before that, he wrote a letter to the institute saying that auditors have signed wrong. Immediately go to discipline. Then he asked me, asked the particular auditor, why I should not go. Why I should not show cause notice? Why I should not tell the discipline committee? Then we went and told them this is the issue. Then we did the format was as per the guidance note format. Responsibility of the management, our responsibility, what we have done. We didn't just give true and correct or something like that. There is a format. Then we also had sampling. We explained the working paper. We said, we have explained that for this we have taken 50% of the invoices for checking whether they are as per the eligibility. When we had our papers, in that 50%, these 2 invoices were not there. So we showed them that also. They got convinced. We have gone through a methodology. Sampling like did not come. Reasonable assurance has been taken. So he said he dropped the issue. So the adherence to the standards plus work papers also helped me. So those things are, otherwise today we will be running behind something needlessly. And you may come out after 6 months, but at 6 months, the pain or the fact that you are under surveillance itself will, the outside the market, how it will be looked at, all those things are there. So we need to ensure that these type of aspects are taken care of. Management representation letter is very, 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 very important. Engagement letter, management representation letter, please get it. Very, very important. MRL is not an audit evidence. But if somebody is not giving an MRL, it is an evidence of absence of evidence. So that also you have to take care of. MRL is very, very important. So again, there are a lot of checklists for Schedule 3, CARO checklist, accounting policy checklist and all those things. You can look at it. We have developed checklists for companies that like whether independent directors required, is it an SMC company, lady directors required, cost accounting records are required, cost auditors required. All these are different parameters. So we have a checklist for that. All these things to take care. So it's a secretarial audit required. If anything is not done, CSR is required. So everything has certain parameters, some threshold limits are there number wise. So we have a checklist for that. Yes, no, conclusion. The third year article, who has to do that again? First year article clerk, third year article clerk, bank confirmation, who has to see it? Bank confirmations, it has to go directly. You should not ask the client to send the bank confirmation. Bank should not give the confirmation to the client and client gives it to you. No. The confirmation has to go directly from you to the bank has to directly send it to you. So authorized person should sign it, you have to post it if it is hard copy. If it is email, you have to send the email. Even they send an email, avoid it. Even if they copy you. So all these practices are evolving over a period of time. Last point is very important. Are we updating this checklist over a period of time? That is also important. So section 1 is over. I'll run through all this very quickly. Whether the firm has clearly wrote, so you have separate accounts person, admin, IT guy, all those things you have. Do you have a documented leave policy? Do you issue appointment letters? So all these things are human resource side, section 2. These are all evaluated. I don't think I have to spend time on these. Exit interviews. Do you have orientation for new people? That's something which is very important. When you do orientation, you have to tell them what is the ethics, what is the confidentiality, how do you go about doing the audit, importance of not everybody writing to the client, you have to go through the managers. All this orientation has to be done. We do orientation once in 6 months. Now again, there are some places where for person has said, I will do orientation for all these firms together. Again, new line of thing. He does the orientation for bunch of 6 firms. Every time they bring in new article clerks, common orientation is done by a specialist. So these type of things, people want to outsource it also. Again, they want to outsource it and get it done. I don't know whether we have this client register for complaints and all those things. I know it's, but it's there in the AQMM. So do you have adequate staff? Number of staff? Do you have adequate number of qualified staff for that particular assignment? So sometimes when you do suppose you get a new audit in a particular industry, you may need somebody in that industry. Even if it's not your own staff, you have somebody from outside, you take him as a consultant, have an NDA, non-disclosure, at least for that assignment. Something you have to do to ensure that we are technically upgrading ourselves for that particular thing. So those aspects are there. So are the assignments adequately manned is something which is very important. Both numbers, the quality of people. That is very, very important.
What is the
For that,
ratio,
there are some numbers.
what is the ratio there? The previous slide. The
Yes, sir.
partners employees and article as shown, the provider partner ratio. What is the meaning of that?
The firm has, say, the partner to employee ratio. They feel for one partner, so many chartered accountants should be there. For chartered accountants, so many paid assistant, article clerks, like a pyramid structure.
Have they given any criteria or standard for all this?
It is there, the implementation guidance has that. So it is there. But what they say is the professionally qualified employee to the proprietor. Suppose if we have 3 partners and you have 3 or more chartered accountants per partner, that means 9 chartered accountants. You get the 6 funds. 1:3, that's what they are saying basically. So there are some firms, they have only article clerks, they don't have chartered accountants. They have, but maybe they are all on a contractual basis. Could be, we don't know. not their own employees, then they will not get the marks. There are some places where they have chartered accountants but no article clerks. There are various types of firm models. Each one operates to their own convenience, but here they are taking certain basic parameters as this is what is needed. Do you have a training policy? Okay, our CPE is different, but for the firm itself, as part of for the, because honestly, tomorrow if you ask your article clerk, second year, third year article clerk, today no third year article clerk, only 2 years of articleship, then paid assistant or even a fresh chartered accountant to look into manual remuneration or CSR, will he be able to do it? Does he have technical knowledge? So you have to teach him, right? So how do we teach him? So you have to gather everybody, have a training. But today a lot of training also gets outsourced. So there are a lot of videos, people subscribe and do it, or the quiz type thing. A lot of firms do that also. So training is important. If you have minimum training hours, you should have a training policy. Then adherence to the policy is next step. So how do you demonstrate that? It can be as simple as even taking a photo and giving it, or having an attendance register. These are all topics were done every Saturday. People sign. To having a module. Large firms have a module where somebody does the training. They log into the module and listen to the speaker wherever they are. It could be anything like that. It's all on training. Appraisal. Do you appraise your employees at the annual basis? The end of every assignment is their appraisal. There are firms which have a fairly good appraisal process. They also have a separate HR person for that also. HR person may not technically, but combination of HR and the immediate supervising manager will help over here. What are the attrition rates? And do you have all these aspects? PF, ESA, gratuity, maternity leave policy, POSH. How are we there in terms of compliance as any other legal entity doing business? It's something that we need to look at. They also say, you have get-togethers, all those things gives you mark. You have, the old one they had a thing that many of us have that after the tax filing, we take them out for a movie, for dinner or something like that, right? It happens. So here also they said, do you give them time out for some time? Do you, what do you say, the work-life balance? Do you have a, so they are asking, do you celebrate these things? This has nothing to do with audit, but it has something to do with development of people holistically. These are new thought processes that are coming, and these are all being evaluated for some points. Further post-qualification courses, of course some of them are mandatory for doing bank audit, insurance company audit and all those. You have to have a DISA like that and all. But this is more for the AQM aspect. KPIs are there. We can have KPIs for audit staff. What is the assistant manager supposed to do? What a manager is supposed to do? What a senior manager is supposed to do? Even partner level KPIs are there. Large firms have KPIs for partners based on which they are more, they get better remuneration, all those things based on certain policies. This is a very sensitive topic. Sometimes the type of firm that we have is all homegrown, but if you really want to make it more robust, you have to make it more professional. Some of these things have to be incorporated. Again, the digital competency model has been brought in here to a large extent. So it talks about, so how many of us have a server, how many of us have laptops, how many of us have desktops, how do we manage the data in that? Do we take backups? Where do the backups go and sit? Does your person have access to your client data? You can take it out. Today clients are asking us, how is it done? Normally what happens, we don't go and talk to the client's IT department. But now, because of this audit trail and all those things, we do. And again, ITGC, IT application control, you go talk to the client IT department. He says, the moment you talk to him, he says, before I talk to you, I want to know, I'm going to give you some answers, some data and all those things. How are you protecting it? So when you are going to go and audit him, you end up being audited. So he's asking you, how are you going to protect my data? What is your IT infrastructure policy? How do you monitor BYOD, bring your own device? So client, if you are doing an audit of a client who's fairly matured person and they are 100% subsidiary of a foreign client, their policies are used here, they also ask you the same questions. You may be a good audit firm, but if you don't have digital competency, they may flag it off. And the major concern, they will say change auditor also. Even to that extent they can go. Or you should say, I have everything manual, sir. That's a different way. But that also has its own implications. So again, I'll quickly run through this. 6:45, another 10 minutes we'll close it. Okay. So do you have a domain name, website? If you have a website, are you as per the ICAI ethics policy as per website? Website has a lot of rules and regulations in ICAI as per ethics. You have a corporate mail ID. Before it was GASMD01.bsnl.net.in. But that is actually a service provider's mail ID. When you go through that, if you have only one thing, it goes through a security mechanism. But nowadays you said you have a domain name, some firm name. Suppose your firm name is XYZ, Aditya at XYZ.com, Ramakrishnan at XYZ.com. Then the backend may be a Google or Gmail or Zoho or whatever thing you are having, but it gives you a domain name. Do you have social media presence? If so, what are the policies that you have for social media presence? What are the do's and don'ts? Today, you can even be an interest party for this related parties and all those things. When you have this UP, unpublished price sensitive information, even a article clerk sitting in a PG, his roommate is also part of that. Not related, but he's part of this circle where unpublished price sensitive information, because he has access to his laptop, the same hostel. Similarly, if you have social media network with somebody you put a friend, there are some cases where people are questioned. Even in some of the major cases, SEBI has questioned how it has happened. So, how are you having social media thing? How do you have social media? The audit team and the clients. And the always how it is, all these policies are supposed to be taken care of. And now with artificial intelligence coming, it raises further questions of how do you use AI? Do you use AI but also use NI, natural intelligence? You just don't take AI and give it. You read it, understand it, and then give it. And AI, putting client data on AI, unless it is a professional AI where it is within the boundary, doesn't go out, can jeopardize confidentiality aspect, because AI builds up on data. So the data can inadvertently go out in a pattern to somebody else. So all those requirements are also there nowadays. So you have HR tools, you have biometrics, attendance, or sometimes some of the companies, the moment they log in, all the software companies have to log in. The moment they log in, then they keep tracking their activity and all those. Timesheets. Do you have a server or all data there in different earlier days, floppy disk, then data disk, you keep it in a drawer, all those things. Today we have a server. Is it cloud server or is it your physical server? How is the data backup taken? These are very important because everything is today the data mode only. So these things are very important. How do you do invoicing? Manual nowadays because of GST, all these things, most of it is systemized. Backup processor, laptop and data security, very, very important. Whether it's your own laptop, you're giving it to. After this COVID, we all started buying more laptops for our staff and all those. Earlier, we used to come work at the desktop and things like that, but now more mobile devices, laptops, and all those things. How are we doing this? Are we giving uh, internet is restricted to certain things? In some companies and all, they don't allow you to use normal some websites. Leave the websites which should never be accessed. Even normal websites they don't allow. Just like that. You cannot get into IPL website, for example, to see the score and all those. So like that also. We have an IT policy. Do you have to change the password every time, every 4 weeks, 5 weeks? Normal thing which is there for any other company, we are supposed to be doing it at some particular level. Nowadays software license and copyright is the earlier days it used to be that person will give you the hardware and also bring some floppy and CD and load all the software and go. Now then FCA portal you cannot use that particular desktop. Then you have to have one desktop with proper copyright, only from that you can upload and all those. But nowadays I think people are more taking care of all these aspects. But here and there, which is rate is very less. These are all more like a wish list that the institute is slowly nudging us into. Please look at this, please look at this. You have to see. Based on our firm's operations, our size, our requirements, we have to take care of these things. Personal data. Now DPDP Act has come, how do we look at it? So this means for slightly larger firms, you have to put a person to tracking all these things. You have to invest in 1%. That means somebody will pay 30,000 rupees, 4 lakhs, 3.6 lakhs, 12 months, plus bonus, whatever it is. You have to invest 4 5 lakhs for this. Do you have emailing software for client communication? So this sometimes you have an update, you have to send to all your clients. So do you have something like that? You put a template, it goes to all your clients. Do you have something like that? Do you have vulnerability audits that are done in your systems? So this is the digital aspect is slightly more there, but please remember if you don't get 30% in this, you will not get any mark for the entire audit quality maturity model. Plus, the lowest percentage that you get in all the 3 sections put together is your mark. You may get very good mark in your first 2 sections. In this section, if you don't get mark, if you get only 50% here, you get 65 and 70 in the other 2 sections. The lowest one will be taken, not average or something like that. Here, they are talking about whether you look into IT controls the audit. See, earlier it was more in our own office procedure and all. Here, most of the clients are into IT processes now. Everywhere is computerized. So, are you looking into their IT controls, IT GC, IT application controls? How are you looking at it? That is part of our auditing standard. That also they have brought it here separately. Do you have somebody trained enough to do that? Some firms, what they do, they have audit team. They also have a separate person to do the ITGC. They have a CSAR, DSAR who do that. And they have a separate income tax review also. Somebody come to review the memo and all those things. So the audit team person will not do IT, information technology, nor IT, income tax. And there will be a separate person to come and take care of GST and all. So normally in our audit firms, we do everything, all these compliances. But there are larger firms, they have specialist teams coming and looking into that. They will give a sign off, then only it goes to the partner and all those things. The level of automation of the audit process, the workflow, as I told you, and all the work papers and all those things. There are a lot of automation. Even institute has automated audit software. It can be used. It is, I think, very nominal cost or something like that. That is there in the professional development, ICAI, PDC, ICAI. They have some tools and all those things brought in also. They are also bringing in, I think, some confirmation tools and all those things also. Institute is bringing it up, which is helpful, very helpful for the auditor. mobile apps. Some firms have their own mobile apps also, through which they have the dissemination of HR policies. Any information has to go to everybody. Instead of sending a mail, the app itself helps you to take care of it. It also notes that they have received it. That also take care. Like your WhatsApp blue tick. It also ensures that they have taken care of, they've seen it and all. This type of technology is there. But again, as and when people start using it, the technology cost will come down over a period of time. Initially, it may be high, but after some time, when more and more entities start using it, it may not be a CA entity. There are a lot of, if you see a particular hospital, they will be using something like that. But the HR and all those things are same across. The service organization, all these things are equally applicable to a hospital as to a CFO. The data protection is more so applicable to a patient data and other things. So we cannot say that this is only for a CFO. These are all mandatory quality aspects at the minimum level we are supposed to maintain. So that's why the AQMM is a good thing that is coming up. Even if we are not able to follow everything fully, even if it is not mandatory for us, we should go through it and see what are all is possible, we should try to take care of. So with that, I come to the end of my presentation. Any specific questions, I'll be glad to take it up. As I told you, please look into the IFAC website where SQC documents are there, Standard of Quality Control, SQM. They have SQM 1, which is a quality control document for a firm. SQM 2, where the audit team is doing everything. There's an expert, another partner, external partner within the firm who does the external quality review. How we should do it, whatever he should see. See, what happens is, you have an audit team, audit manager, audit partner, everybody has seen it. For some companies, another partner should do a quality review. So find the quality review partner, he is the engaged partner, already seen it, you are the manager, all the team members have done. How much should I do? Should I scratch the surface and see? Or should I do a re-audit itself? If I do a re-audit, he thinks I am not believing him. So all these things are there. So it is governed by certain standard. What needs to be done at the basic minimum? SQM 2 talks about that. So I will ask whether did you have a planning document? Did you do a risk evaluation document? Did you see fraud evaluation? Did you do? For fraud evaluation, what we do, we see whether journal vouchers and all we check. We look at the estimates, fraud controls. Are there anti-fraud controls in the organization? How does the CFO, you should ask the CFO, how are you preventing fraud from happening in your company? What is your perception of main areas where fraud can happen? You're doing the bank audit today. SASR news that one bank employee took 5 people's FD and put it in some stock market, gone. Now, how did it happen? How she had the mobile numbers were not changed to her mobile number. How was the mobile number changed? Before the mobile number is changed, OTP will go for the original mobile number. Why it didn't go? Did the software create a problem? Or did somebody did a collusion? If it is a collusion, no amount of controls will be useful. You build a very high wall. From inside, somebody is opening the door and letting the thief inside. Collusion cannot help. Stronger, how much ever strong internal controls are, if collusion is there, it will circumvent. But not every fraud happened because of collusion. Many things happen because of controls are being weak. One window is open, the grill is not there, door is closed but not locked. Everything put together, it creates a problem. So, how we evaluate all those things? So, something which is important to look into. So, these type of things are to be debated more and more with us. The audit quality maturity model doesn't tell you how to do the audit, but it takes you almost to that extent. The auditing standards only help you, and the documentation requirement, which is a separate thing, how you plan the audit, how you do a risk evaluation, those things also, the checklist and all will take care of aspects. It does help you to enhance the quality. So, please do look at these aspects, and even if it is not mandatory for you, please spread the word to your colleagues, your friends, others as accountants in practice. I should at least go through this. You can always take the good things, whatever is possible by us, we can plan it out. Thank you for your patience.
Thank you, sir, for this enriching session. As a token of our gratitude and appreciation, I now request CA Ramachandran sir to kindly present the memento to CA Mahesh Krishnan sir.
I will not, sir. No. Thank you. Thank you. Thank you.
Thank you, sir. I also thank all the members for participating and making it successful.